Welcome back. Today we're diving into the numbers from a giant in the Indian engineering and construction space, Larsen Toubro, or L&T, as most of us know them. These guys are into everything from major infrastructure projects to high-tech manufacturing and IT services. A real bellwether for the Indian economy, wouldn't you say?
Absolutely. L&T is a massive conglomerate with a sprawling presence. They are headquartered in Mumbai, India, and their operations span across EPC projects, high-tech manufacturing, and various services. It's always insightful to see how they're faring.
Right, so L&T has released its audited financial results for the quarter and full financial year ended March 31, 2025. The Board of Directors approved these results at their meeting held on May 8, 2025. We'll be looking at both their consolidated and standalone performance. Where should we start?
Let's kick off with the consolidated financials for the fourth quarter of fiscal year 2025. That's the quarter ended March 31, 2025.
Sounds good. How did their revenue from operations look for Q4 on a year-over-year basis?
For Q4 FY25, consolidated revenue from operations stood at 74,392.28 crore rupees. This is up from 67,078.68 crore rupees in Q4 FY24. That's a healthy growth of about 10.9% year-over-year.
Okay, a good jump there. And how does that compare to the immediately preceding quarter, say Q3 FY25? So the quarter-over-quarter performance.
Right. Sequentially compared to Q3 FY25, the quarter ended December 31, 2024, where the revenue was 64,667.78 crore rupees, the Q4 FY25 revenue of 74,392.28 crore rupees shows a strong increase of about 15.04%. So good pickup in momentum towards the end of the year.
That's a significant sequential jump. Now let's talk about profitability. What about their EBITDA for the quarter?
For Q4 FY25, the consolidated EBITDA was 8,203 crore rupees. Comparing this to Q4 FY24, where it was 7,234 crore rupees, that's an increase of 13.4% year-over-year.
And the quarter-over-quarter EBITDA movement?
For Q3 FY25, the EBITDA was approximately 6,254.87 crore rupees. So the Q4 FY25 EBITDA of 8,203 crore rupees represents a substantial sequential growth of about 31.15%. The EBITDA margin for Q4 FY25 also improved to 11.0%, up from 10.8% in Q4 FY24 and 9.67% in Q3 FY25.
Impressive on both fronts for EBITDA. What about profit before tax, PBT, for Q4, before any exceptional items?
The consolidated profit before tax before exceptional items for Q4 FY25 was 7,539.24 crore rupees. This is a solid increase from 6,328.23 crore rupees in Q4 FY24, marking a 19.14% rise year-over-year.
And sequentially from Q3?
Compared to Q3 FY25's PBT of 5,333.03 crore rupees, the Q4 figure shows a very strong sequential growth of 41.37%.
Moving down to the bottom line, what's the story with profit after tax PAT attributable to the owners for the quarter?
The consolidated PAT attributable to owners for Q4 FY25 came in at 5,497.26 crore rupees. This is up significantly from 4,396.12 crore rupees in Q4 FY24, a jump of 25.05% year-over-year.
And the sequential PAT growth?
Sequentially, from Q3 FY25's PAT of 3,358.84 crore rupees, the Q4 PAT shows a remarkable increase of 63.67%.
That's quite a surge. How does this translate into earnings per share, EPS, for Q4?
The basic EPS for Q4 FY25 was 39.98 rupees. This is up from 31.98 rupees in Q4 FY24, a 25.02% increase year-over-year. Sequentially, from an EPS of 24.43 rupees in Q3 FY25, it's a 63.65% jump.
Did other income play a significant role in Q4?
Other income for Q4 FY25 was 1,135.05 crore rupees. This is higher than the 1,041.74 crore rupees in Q4 FY24 an increase of about 8.96%. Sequentially, it was also up from 967.87 crore rupees in Q3 FY25, a 17.27% rise.
Now let's look at the full year consolidated performance for FY25 compared to FY24. How did the annual figures stack up for revenue and EBITDA?
For the full financial year 25, consolidated revenue from operations was 2,55,734.45 crore rupees, up from 2,21,112.91 crore rupees in FY24. That's a growth of 15.66%. The consolidated EBITDA for FY25 stood at 26,435 crore rupees, compared to 23,494 crore rupees in FY24, an increase of 12.52%. The EBITDA margin for FY25 was 10.3%, slightly down from 10.6% in FY24.
And the full year PBT and PAT?
Full-year consolidated PBT before exceptional items for FY25 was 23,104.01 crore rupees, up 13.12% from 20,423.50 crore rupees in FY24. The consolidated PAT attributable to owners for FY25 was 15,037.11 crore rupees, a 15.15% increase from 13,059.11 crore rupees in FY24.
And the full year EPS?
The basic EPS for FY25 was 109.36 rupees, up from 93.96 rupees in FY24, a growth of 16.39%.
Any notable trends in other income or exceptional items for the full year on the consolidated side?
Full year other income was 4,124.82 crore rupees, a slight dip from 4,158.03 crore rupees in FY24. For exceptional items, FY25 saw a net gain of 474.78 crore rupees after tax, primarily due to a partial reversal of an earlier impairment provision for L&T Special Steels and Heavy Forgings Private Limited, or LTSSHF. This compares to an exceptional gain of 93.61 crore rupees in FY24.
Okay, that gives us a good picture of the consolidated side. Now, let's shift focus to the standalone financials. How did L&T perform on a standalone basis in Q4 and for the full year FY25? Let's start with Q4 revenue, YoY and QoQ.
Right. For the standalone Q4 FY25, revenue from operations was 42,328.96 crore rupees. This is up 7.02% from 39,550.54 crore rupees in Q4 FY24. Sequentially, compared to Q3 FY25's revenue of 34,983.99 crore rupees, the Q4 standalone revenue grew by 21.0%.
And standalone EBITDA for Q4, YoY and QoQ again please.
Standalone EBITDA for Q4 FY25 was approximately 3,757.51 crore rupees. This is up 7.73% from about 3,487.83 crore rupees in Q4 FY24. Sequentially, from Q3 FY25's estimated EBITDA of 2,882.69 crore rupees, the Q4 standalone EBITDA grew by a strong 30.35%. The standalone EBITDA margin for Q4 FY25 was 8.88%, slightly up from 8.82% in Q4 FY24 and 8.24% in Q3 FY25.
What about standalone PBT and PAT for the quarter?
Standalone PBT before exceptional items for Q4 FY25 was 3,964.04 crore rupees, an 18.58% increase from 3,342.85 crore rupees in Q4 FY24. Sequentially, it jumped 30.11% from Q3 FY25. Standalone PAT for Q4 FY25 after exceptional items was 3,508.99 crore rupees. This is a significant 29.23% increase from 2,715.28 crore rupees in Q4 FY24. Sequentially, it was up 45.94% from Q3 FY25.
And the standalone EPS for Q4?
Standalone basic EPS for Q4 FY25 was 25.52 rupees, up 29.21% year-over-year and 45.91% quarter-over-quarter.
Now for the full year standalone performance for FY25. How did revenue and EBITDA fare?
For the full year FY25, standalone revenue from operations was 1,42,509.01 crore rupees, up 12.9% from 1,26,233.36 crore rupees in FY24. Standalone EBITDA for FY25 was approximately 11,588.25 crore rupees, a 19.11% increase from FY24's 9,729.28 crore rupees. The standalone EBITDA margin improved to 8.13% in FY25 from 7.71% in FY24.
And the full year standalone PBT and PAT?
Full year standalone PBT before exceptional items for FY25 was 13,098.98 crore rupees, up 20.17% from FY24. Standalone PAT for FY25 was 10,870.72 crore rupees, a 16.49% increase from 9,331.41 crore rupees in FY24. The basic EPS for the full year was 79.06 rupees, up 17.75%.
Any comments on exceptional items on the standalone side for the full year?
Yes. Similar to the consolidated picture, the standalone financials for FY25 also include an exceptional gain of 474.78 crore rupees net of tax related to the LTSSHF impairment reversal. FY24 had an exceptional gain of 447.99 crore rupees.
It seems both consolidated and standalone results show strong growth, especially in profitability. The exceptional gain certainly helped the reported PAT.
Definitely. The core operational performance seems robust, and the exceptional item provided an additional boost to the net profit figures.
Let's touch upon the balance sheet. What are some key highlights from the consolidated balance sheet as of March 31st, 2025?
As of March 31st, 2025, L&T's consolidated total equity attributable to owners stood at 97,655.60 crore rupees, up from 86,359.24 crore rupees a year ago. Total assets increased to 3,79,524.10 crore rupees from 3,40,135.97 crore rupees. Total debt, including non-current and current borrowings, and current maturities of long-term borrowings, was around 1,29,559.34 crore rupees, up from about 1,14,039.77 crore rupees as of March 31st, 2024.
How about the cash flow situation for the full year FY25 on a consolidated basis? And any news on dividends?
For FY25, net cash generated from operating activities was 9,160.71 crore rupees, which is lower than the 18,266.28 crore rupees in FY24. Net cash used in investing activities was 15,517.51 crore rupees, a significant increase in outflow compared to the prior year. However, net cash generated from financing activities was 6,556.62 crore rupees, a stark contrast to the 25,413.36 crore rupees used in financing activities in FY24. This resulted in a net increase in cash and cash equivalents of about 199.82 crore rupees for FY25. And yes, good news for shareholders. The board has recommended a final dividend of 34 rupees per equity share for the financial year 2024-25.
That's a key takeaway for investors. Now, L&T is a diverse company. Let's break down their segment performance on a consolidated basis. How did the key segments like infrastructure, energy, and IT and technology services perform in FY25 in terms of order inflow and revenue?
It was another year of strong all-round performance with record order inflows. Consolidated order inflow for FY25 exceeded 3.5 lakh crore rupees, specifically 3,56,631 crore rupees, and 18% year-over-year growth. The consolidated order book stood at a record 5,79,137 crore rupees as of March 31st, 2025, up 22%. Infrastructure projects. This segment continues to be the largest. It secured order inflows of 1,73,226 crore rupees in FY25, up 21% year-over-year. Revenue for FY25 was 1,29,897 crore rupees, a 15% growth. The EBITDA margin improved slightly to 6.4% from 6.2%. The order book for this segment is a massive 3,57,053 crore rupees. Energy projects. This segment saw robust order inflow growth of 19% to 87,569 crore rupees. Revenue grew sharply by 38% year-over-year to 40,668 crore rupees. However, the EBITDA margin declined to 8.4% from 10% in FY24, mainly due to the early stage of execution of new orders in the hydrocarbon business. Their order book is 1,65,754 crore rupees. High-tech manufacturing secured orders worth 18,282 crore rupees, up 28%. Revenue grew 18% to 9,695 crore rupees, and the EBITDA margin improved to 17.3% from 16.3% due to a better job mix. The order book stands at 40,388 crore rupees. IT and Technology Services, or IT&TS. This segment, which includes LTI Mindtree and L&T Technology Services, recorded revenues of 47,845 crore rupees, a modest growth of 8% year-over-year, reflecting the subdued global macro environment. The EBITDA margin was 19.5%, down from 20.4% due to lower operating leverage. Financial Services registered income from operations of 15,194 crore rupees, up 16%, mainly due to scaling up retail disbursements. The net interest margin plus fees for FY25 was 10.6%. Development projects revenue declined by 4% to 5,371 crore rupees, as the previous year had higher revenue from monetization of a large commercial property in Hyderabad Metro. Others segment saw a revenue decline of 7% to 7,065 crore rupees, largely due to lower handover of residential units in the realty business. However, its EBITDA margin improved significantly to 29.2%.
That's a very comprehensive breakdown. It highlights the strength in infrastructure and energy project orders, and a solid performance from high-tech manufacturing as well. IT and TS seems to be navigating a tougher global environment. What about the overall performance context and any significant notes from the management or the report itself?
Management commentary highlights a strong all-round performance despite continuing macroeconomic volatility. The record order inflow and order book provide good visibility. They've also made strategic investments in new-age businesses like semiconductor technologies and data centers. The exceptional gain we discussed earlier arose from the partial reversal of an impairment provision for L&T Special Steels and Heavy Forgings Private Limited, which became a wholly owned subsidiary during the year after L&T acquired NPCIL's 26% stake. Other significant events include the upcoming 80th Annual General Meeting scheduled for June 17, 2025, the record date for the final dividend being June 3, 2025, and changes in key managerial personnel with Mr. Sivaram Nair, retiring, and Mr. Subramanian Narayan being appointed as Company Secretary and Compliance Officer. They've also appointed M/S/S and Anantha Subramanian and Company as Secretarial Auditors for 5 years.
Now, a very crucial part. The auditor's report. What did the joint auditors, MSKA and Associates, and Deloitte Haskins and Sells LLP, have to say about both the consolidated and standalone financials for the year ended March 31, 2025?
This is indeed critical. For the consolidated annual financial results, the auditors have issued an unmodified opinion. This means that, in their view, the financial statements give a true and fair view in conformity with the Indian accounting standards and other accounting principles generally accepted in India. Similarly, for the consolidated financial results for the quarter ended March 31, 2025, which were reviewed and not audited, they have expressed an unmodified conclusion.
And for the standalone financials?
The story is the same for the standalone annual financial results. The joint auditors issued an unmodified opinion. And for the standalone quarterly results, they provided an unmodified conclusion based on their review. The other matters section in both reports contains standard disclosures. For instance, it mentions that the financial information of certain joint operations, subsidiaries, associates, and joint ventures included in the consolidated results were audited or reviewed by other auditors, and their opinion is based partly on the reports of these other auditors. This is typical for a large complex group like L&T. They also state that the figures for the quarter ended March 31 are balancing figures. The company secretary also provided a declaration confirming the auditor's report is with an unmodified opinion. So no qualifications or adverse remarks from the auditors.
That's good to hear. Clean reports from the auditors are always a positive sign. So considering all this, what's the outlook and risks for Larsen & Toubro based on these results?
The management commentary in the press release sounds cautiously optimistic. They highlight the resilience of the Indian economy despite global uncertainties, driven by public infrastructure investments and a revival in private investments in areas like energy transition and data centers. The Middle East also continues to be a strong market for traditional areas like oil and gas and infrastructure. L&T plans to focus on timely execution of its large order book, preservation of liquidity, and optimum use of capital. Risks remain largely external, such as rising cross-border tariffs, supply chain disruptions, and geopolitical stresses. Volatility in crude oil prices is another factor. However, with a strong order book and a diversified portfolio, L&T seems well positioned to navigate these challenges. And of course, the standard disclaimer: investment in equities is subject to market risks. Investors should consult their financial advisors before making any investment decisions.
Great. So to conclude, what are the main takeaways from L&T's Q4 and FY25 performance?
L&T has delivered a strong performance in FY25, marked by record order inflows and a robust order book, ensuring good revenue visibility. Both consolidated and standalone financials show healthy growth in revenue and profitability, especially in the fourth quarter. Key segments like infrastructure, energy, and high-tech manufacturing have performed well. The dividend recommendation is also a positive for shareholders. Importantly, the auditors have given clean, unmodified opinions on both consolidated and standalone annual accounts. While challenges in the global macro environment and geopolitical risks persist, L&T's diversified business model and strong execution capabilities place it on a solid footing.
Excellent analysis. A lot to unpack there, but it seems L&T is navigating the current environment quite effectively. That's all the time we have for today. Thanks for tuning in.